Also, guys, we're going to be analyzing the financial statements and information of Vertex Pharmaceuticals. Of course, it's the third in our list of pharmaceutical stocks and that are listed on the Nasdaq. So we're going to start off with the chart showing its performance over its lifetime. So over its lifetime, it has increased its value by 348%, which is okay. And price to earnings ratio currently is 27.01, which is of course quite good. Market cap 89 billion, revenue 8.9 billion, earnings per share. So the dollar earnings or dollar profit per share of stock is $12.86. The beta, so the standard deviation risk level, is about 49% of the average. So it's in the Nasdaq Stock Exchange, listed on the Nasdaq Stock Exchange. So having a beta of 0.49 just means that the volatility of the stock movement of the stock price is 49% of the market average for the Nasdaq. Dividend yield, I don't think it pays a dividend, so nothing there. We're not going to look at the less important information like the 4-week relative price change and stuff like that. I don't think that information is very important. I'm going to skip to the ones that I think are important. I think in future videos we'll start divulging or delving into the more minute and specific piece of information like net interest coverage and debt to equity ratios and stuff like that, because I do feel like they are important. Let's just go back into the financial statements. So the income statement shows that the total revenue for 2022 was 8.993 billion. Let's just compare it to the previous years. 8.93, 7.57. So there's clearly an upward trend here for total revenue. Let's just see if the expenses have decreased as opposed to increased. 3.535, 4.79, 4.62. So 2022 had a slightly lower expense amount compared to 2021, which is good, of course, a good sign. But the revenue increased. So I think from 2021 to 2022 there was a positive change. The 2020 compared to 2021, I don't think is as good as 2021 compared to 2022, simply because although the total revenue increased from 2021 to 2020 to 2021 by 1.57 billion, I believe. No, 1.36 billion. The total expenses also increased, so that kind of takes away from that. Let's just see how much the total expenses increased by. So 3.35 to 4.79. So that's about 4.44. So 1.44. So it kind of matches. So the amount that increased by with regards to the total revenue is kind of taken away by the total expense increase. So let's just quickly check the operating income. 2.78, 2.86. At 4.31. So there's clearly a huge jump from 2021 to 2022, not only in the total revenue and a decrease in the total expenses, but also operating income. So clearly the company's done quite well from 2021 to 2022. We're going to skip all the tax information because I don't think it's as important, because we are at the early stages of financial analysis. This is only the third video in, so once you get a bit further down the line, I think we can start looking at more aspects of the company's financial data. So the balance sheet depicts the company's total assets and liabilities. So we can check the net worth of the company. So the total current assets. So let's just quickly check what total current assets means, just in case, just as a refresher. Current assets. The current assets definition being cash and other assets that are expected to be converted to cash within the year. So the current assets of the company in 2020 was 8.13 billion. Current assets. So there's clearly a growth here. Of course, as we saw the trend in total revenue and the other aspects of the income statement, we can see here in the balance sheet that there's a major jump between from 2021 to 2022 with regards to current assets. Let's just check the total assets over time. So total assets were 11.75 billion 2020, 2021 13.43, 18 points. So it's clearly a massive jump here. I guess an increase in all the other positive financial aspects trickles down to or affects the other aspects of the company's financial data. So let's check the current liabilities: 2.74 in 2022, 1.88, 2.14. Let's just check if there's a major jump. Because so it's quite there's quite a steady growth there. I won't say growth, steady increase in total current liabilities. Let's check the definition of current liabilities. I assume it's the liabilities that are due to be paid off or liquidated within the next 12 months. So current liabilities are the debts a business owes and must pay within 12 months. So yeah. So let's check the equity. So of course we need to differentiate equity and assets. Equity, total equity. So in essence, total equity is the amount invested in a company by investors in exchange for stock, plus all subsequent earnings of the business, minus all subsequent dividends paid out. Many smaller businesses are strapped for cash and so have never paid any dividends. So let's get a better definition for that. So total equity is essentially the amount of stock that the company has outstanding in exchange for cash. I think it's just the cash balance that the company has that's been exchanged for stock. So as you can see, the common stock total. So it's 10.1 billion. So total common shares outstanding, and you can see total liabilities and shareholders' equity 13.4 billion. So total equity I think is debt minus assets. Sorry, assets minus debt is still 10.1 billion. And cash flow statement. So the the cash flow statement, which starts off with net income, which is 3.32 billion for 2022. Let's see if there's a growth there. 2020, 2.7, 2.34. So there's a dip in 2021, but I guess the income was regained, or the position was regained in 2022. Cash from operating activities, 4.13 billion. Cash from investment activities, 3.21 billion. Sorry, 321 million. And cash from financing activities. Let's check the definition of cash from investment activities and cash from financing activities. Cash from investment activities. Cash flow from investment activities is a section of the cash flow statement that shows the cash generated or spent relating to investment activities. Investment activities include purchase of physical assets, investments in securities, or the sale of securities or assets. So cash from financing activities, I guess, we're the same. Financing. What is cash flow from financing activities? Cash flow from financing activities (CFF) is a section of a company's cash flow statement which shows the net flows of cash so I guess it's after taxes and all expenses are paid, of cash that are used to fund the company. Financing activities include transactions involving debt, equity, and dividends. So debt, equity, and dividends funneled into the company via stock markets, etc., and other avenues are what constitute cash flow from financing activities. So overall, net change in cash. Let's check the definition. Net change in cash. So we're going to compare 3 years. In order to calculate net change in cash, you must first add up all non-credit receipts for the period. This amount is often referred to as the gross cash, often totaled cash cash outflows paid out of obligations and liabilities are deducted from gross cash. Difference is net cash. Cool. So what does negative net change in cash mean? Negative net cash flow is when your business has more outgoing than incoming money. You cannot cover your expenses from the sales alone. Instead, you need money from investments and financing to make up the difference. For example, if you had £5,000 in revenue and £10,000 in expenses in April, you had a negative cash flow. So cash flow was positive 2022, 811 million, 2021, and 2020 was 2.7 billion. So 2021 wasn't a great year for net change in cash. Cool. So that is the analysis of the basic financial information related to Vertex Pharmaceuticals. I will see you in the next video.